Looking for a job without much luck? Still feel like you and your family are getting by week after week? Feeling those prices for everyday goods continuing to increase? All economic indicators show you're not alone. Welcome back to the States. I'm Greg Bishop. Earlier today, I talked with Everyday Economics co-host Orphe Divounguy about what the latest data suggests and what to expect for this week. Orphe, the economy is not falling apart. Business investment strong, and you write that private domestic demand still grew at almost 4% annualized, but it looks, like things might be stalling out. What exactly is going on here?
Yeah, I mean, when you say business investments, really the AI fueled, right? And outside of it, there isn't much moving at all. Businesses aren't hiring. The hiring rate is as low as it's been since maybe 2012. Shoppers aren't really getting more. When you look at retail sales numbers, they're up roughly 5% year over year, but most of it is due to the price increases. And so consumers are just paying more for less. And so that is what's going on in this economy. If you look at the labor market, we're adding roughly 34,000 jobs per month. And in normal expansion, we were adding about 186,000 per month on average, right? So we're running at less than a fifth of the old pace. And the only reason unemployment hasn't risen is because there are simply fewer people looking for work in the first place. So weak demand for workers, but also a shrinking supply of individuals looking for work.
What does that mean for people who are looking for work? Are they able to get a higher paying job, or does it just mean that there's fewer opportunities for them to pick from?
They're stuck. There are fewer opportunities to pick from, right? And even the people who are employed right now, if you look at quit rates tend to be kind of a signal of, if I feel good about my employment prospects, I might just quit my job and go get a higher paying job, right? Quit rates are at very, very low levels right now, because even people in a job right now are reluctant to go ahead and try to move up the pay ladder by switching to another job. It's just a lack of opportunities out there. Businesses aren't hiring. If you're not in AI or, in San Francisco or in, parts of the Pacific Northwest, there just aren't a lot of opportunities in this labor market. Maybe one more industry, healthcare. I think when we see this in the past year, healthcare has continued to create jobs. So healthcare, and of course the AI, related sectors, like right now the building of data centers is where the jobs are. If you look at residential construction, starts, permits are falling. That's not doing very well either.
And we're going to find out a lot more about the housing starts this week with some reports due out. But obviously still looking at the overall prospects of the jobs markets and what that means to consumers. How are and should consumers be viewing what's happening with the jobs market?
Yeah, I think most households are just trying to keep up, right? Inflation is exceeding wage growth. And so, your real purchasing power has fallen over the past year. And so I think most households are just trying to keep up. It's like running on a treadmill, right? And not going anywhere. And if you look at retail sales, you look at consumer spending overall, it's really just kind of holding on for dear life. If you look at, and that's on the price front, right? You look at interest rates remain elevated. And so that means that households are now paying more to service their debts. So if you combine, higher credit card debts and auto loan payments to rising prices, you have a household that's increasingly squeezed. And that's kind of what the picture looks like for most households in the United States. Of course, when we talk about this kind of K-shaped economy, the 10% spending 50-60% of the share of the total spending, right? You do have that segment at the top that continues to spend because, of course, they can't afford to. they have gained so much in stock market returns. Many of them invested in the stock market in getting to benefit from the surge in AI-related companies, right? In the stock of AI-related companies. But the rest of the economy, really, the majority, really just kind of holding on and hoping that there will be some resolution in terms of the Middle East conflict. There will be some resolution in terms of gas prices coming back down and then providing, kind of that windfall. Right now, that's not happening.
Orphe, a lot of things to consider here this week. As we mentioned, housing starts. I want to get your take on what to expect briefly, but where does all this lead the Fed leading up to Wednesday's meeting minutes being released?
Yes, in terms of construction, the fact that mortgage rates remain elevated, and of course, we're headed into kind of the summer season too, where kind of housing activity tends to cool down. You take all of that, and I don't expect builders to step on the gas. I think permits are going to remain low, if not at a what I consider a depressed level. But you also have a lot of units that were authorized but not started yet, right? And that means basically starts could go up. Builders could say, okay, well, we've already got all these permits. We're waiting to get these units started. And so maybe we could start some of these units ahead of next year's home shopping season. Remember, it takes 7-8 months to get units on the market. And so they might start, later this summer to actually build some of these units that were permitted already. But I don't see permits increasing, right? I don't see them saying, hey, let's plan to build new communities in the current environment, especially given that they have more sitting inventory, right? More inventory kind of sitting there waiting for people to walk through the door and to sign the contract. So builders are facing those major headwinds right now as mortgage rates remain elevated, persist at much higher levels than we've had in a while, right? Last year, this time, mortgage rates are falling. This year, they increased and they remain elevated because of all the factors, right? The macro headwinds, the conflict, the tariffs, everything that's pointing to inflation remaining higher for longer.
Well, Orphe, a lot more for us to digest, including later this week with the FOMC meeting minutes being released and the significance of that being. We'll get a better idea of where the board of the Federal Reserve really is at in keeping rates flat, but are they angling towards increasing those rates? So we'll have you back on here in the very near future to review those meeting minutes and see exactly what that tells us moving forward. Orphe Divounguy, Ph.D. economist, greatly appreciate your time as always.